Hey everyone, welcome to the video, and it is October 24th, 2019, and I'm here to do a real quick update on Chainlink as I've been doing almost every day for the last week or so, and so far so good. What I always like to say is, it's not good to get too um, you know, too overly emotional, too overly confident in anything. So I'm going to keep this real quick. I'm going to keep it nice, short and sweet. There's a couple things that I'm seeing here that I'm not a real big fan of. But of course, before I get started, everything I'm going to be talking through today is not financial advice. I'm not your financial advisor. I'm here to give my perspective and my opinion on the market. I'm not going to tell you where you should be entering and exiting trades. That is your decision. Nonetheless, I'll go ahead and kind of take a look at this a little bit here because some very interesting formations in the market, and I'm down here on a 1 hour time frame, so I'm just going to kind of clean up my counts just a little bit here. This is our bullish count. So this cyan that we're seeing here, this is our bullish count. And if I move to a higher time frame, you can see that, we are at resistance. So this is resistance, and actually, this resistance level that I outlined here on yesterday or the day before at $2.72, we were bouncing off of that. We've bounced off of that level, and we haven't pushed through it. But going back down here to the hourly, one thing that I did mention is more than likely we were going to find on this green resistance level where we were pulling back, and then going up, finding support here, which we did, and trying to move up. Now we are trying to move up right now, but it's not really working to our favor at the moment. What I'm going to pay attention to is this high, and this high right here. We haven't quite hit that again, but what I'm seeing here is not the greatest. It's not the greatest formation, because what this is right here, this is a bearish flag, and we're right up here at the top right now. So in the event that you did happen to rebuy on the dip down here at about $2.62, I would be very skeptical, and I'd be setting your stop losses probably here at about $2.68. Not a whole lot of profit to be had there, but on the hourly, we have lots of hourlies that are finding their closures above this. So this is going to be what I'm going to refer to as our short-term critical support zone, and we are in between our short-term critical support zone and our, we'll call it midterm resistance. So we're not above $2.72. I'd like to see us get back above 275. If we get above 275, that would be really great. But again, this is a short-term update, and I'm going to keep it real short. I'd like to keep this 5 minutes or so, because this is not looking the greatest. We're not able to take over these highs up here. We haven't quite reached that yet. For us to be at least short-term bullish, we need to get above this level here at about 278. And again, just like I always like to say, and I was saying it just the other day, from down here, we want to see up, a retest, and then now we need to see another up and a retest down here for us to go up and test 295, for us to get back up to about $3. If it were my money, if it were me doing this, I would say we should go ahead and just sell here, because we're at resistance. Even if you just bought down here at 262, we're up here at about 272. So I mean, it's only a 10-cent move. It's very little in the grand scheme of things. And if I put a measurement on this, from down here at this resistance line, moving up to where we are right now, it's only 3.5%. That's not a lot, but it's 3.5% over the course of about 7 hours, which isn't that bad. I mean, obviously people are here because, oh, in 2017 we had 100% moves in an hour. Oh, it's 2017 we had 1,000% moves in a year, 10,000% moves. This is not what's happening right now, and you shouldn't be expecting that. So I'm just here to put things into perspective, taking a look at this bearish formation, and I'm not going to be bullish anymore until we get above this level here. Again, above about $2.80. It'd be really great again to get above 275. 275 to 280. This is going to be resistance because it was resistance before. And again, if you took Fibonacci and you threw that on here and we took a look at what we are currently doing right now, we're sitting right here at the 786, which is, it's a good target to sell if you were accumulating. So I would expect there to be a pull down. I do expect we're going to fall out of this wedge, which is going to give us more opportunities to buy. The bigger question is, are we going to go further than, these two ultra critical support zones, which we have been talking about for the last couple weeks, which, if you take a look at it here, I'm just going to explain this really quickly, and then I'm going to call it good support here, decent support here, and then we had liquidity hunting down here when Bitcoin made a decent move, and then we found support again, and then we had a front run up here. So there's lots of support here in this zone. I would say anywhere between 240 and 255. That was good support, and I use the word was because when we come back down to it, there's a decent probability that we are going to fall down. I'm going to use my trend-based fib extension, go from the top down here to the bottom and back up where we have currently tapped out. Doesn't mean that this is where we're going to stop, but we're looking for another move down to 245, possibly $2.30, and even as far as 217. Very possible for us to come back down here and test this area, although I would be more inclined to say that we're going to find support at $2.30 if we are to fall out of this wedge. Again, these two areas, 248 and 228 to 230, are areas that I would be looking for us to complete this potential correction. That still could be working itself out. This could be an ABC, and then we could be working on an ABC and then furthering down for another correction. So I have to keep my eyes on the bearish counts on this as well. It's not all about being bullish, even though I have been pretty good on my bullish counts here on Chainlink, but I have to think that, with this chart formation, if we fall out of this, we're likely going to come back down to at least 255. So I would be very careful because, again, looking at this, what we likely have just completed is from up here, we have our A, B, C, and then we're going to be creating this A, B, C, which I really haven't put on the chart, but we can see that here. And then we likely could be creating another A, B, and then a C to bring us back down to these levels. And again, it could go lower. It might not come this low, right? It all depends on what happens with this pennant. If we eventually get to this point where we're starting to, again, kind of move ourselves up here, that's great. If we find ourselves moving down out of it, then we're going to be looking for those lower targets. So that's really what I'm focused on Chainlink right now. I'm focused on this wedge because it does look a little bearish, and on higher time frames, if we take a look at Fibonacci on this retrace from all the way up here, all the way down here to the bottom, right now you can definitely see where our first rejection was here at the 786. And now we're sitting down here. We're actually above the 618 and we're above the 65, which is, honestly, that's pretty good. That's pretty good. So it's hard for me to be super bearish on Chainlink, but keeping an eye on that, our target for this, if we are bearish, is going to be back at $2, which it wouldn't surprise me if we got there, which is why it's really a good idea to manage your risk on these lower time frames, because if we fall out of this, it's very possible that we head back down to $2. So you just have to keep things into perspective. You have to know when you're wrong. And for us to be bullish, we have to know that we are going to be wrong, likely down here at 268 down to about 266. So somewhere in this zone, this is where I would be looking for short-term support. And likely this is where we would bounce, right? We'd likely bounce down here. But once we bounce down here, we're going to maybe find resistance on this lower trend line, for us to continue to move down. So again, I went about 4 minutes and 50 cents longer than I wanted to, but wanted to kind of explain what I was seeing there in Chainlink. Again, if you have any questions or anything, feel free to let me know. If you'd like an invite to the Discord, feel free to put a comment down in the comments, and I'll be more than happy to get you an invite code. Doesn't cost anything to join. We're good, friendly people, and yeah, I mean, hopefully you learned a little bit here, and I'll catch you all later. I'm probably going to do one more update. It does happen to be my birthday today, so I'm trying to keep it simple and get things out before the day really gets started. So have a good day, everyone, and I'll